Why would a large corporation in a business that has nothing to do with Bitcoin or blockchain applications accumulate and build a Bitcoin position in their treasury? The key reason is the potential of significant returns over the coming years. As demand for Bitcoin rises, corporations can benefit from what could be substantial gains in the value of the digital asset. Over the last 4 to 5 years, Bitcoin has become a widely accepted crypto asset for building a reserve for longer-term accumulation by corporations, sovereign wealth funds, ETFs, hedge funds, smart contracts, individual investors, as well as other entities. In 2009, when Bitcoin was first structured, it was designed as a digital asset on the original immutable blockchain that not only required proof of completion of complex mathematical formulas in order to mine the coin, but was also set up with a limited amount of coins, 21 million, and a limited amount that can be mined annually, which halves every 4 years, which again will limit the amount of new Bitcoin available for mining. So, a corporation that has excess cash flow from earnings or the ability to raise capital on reasonable terms is looking at the long-term value of this digital asset and therefore accumulating it based on models that show limited supply and therefore increasing values for Bitcoin. There are a number of models based on the increasing demand, which now includes the US government looking to build a strategic reserve, while the mineable asset decreases and eventually stops. No one really knows what that figure will be, but the consensus is it will be much higher than it is today, which is trading in around the 80,000 US dollar range. In designing the Bitcoin Leaders Enhanced Income ETF, HBTE, we want to focus on the top 15 publicly traded companies that are accumulating and storing Bitcoin in their treasuries and have options available on their stock. In addition to that, we are using a modest amount of leverage at 25% and selling call options on the underlying stocks to generate premium income, which will be paid out to unit holders on a monthly basis. The Harvest Bitcoin Enhanced Income ETF, HBIX, holds units of the iShares Bitcoin Trust ETF. This portfolio is overlaid with a covered call strategy to generate high monthly cash flow. It also employs leverage at approximately 25% to generate even higher levels of income and growth potential. Harvest has built a successful track record over the last decade of generating attractive monthly income through option writing and now has one of the most experienced teams in Canada working these option markets to generate income. The Harvest Bitcoin Leaders Enhanced Income ETF and the Harvest Bitcoin Enhanced Income ETF are the latest products managed by our team. We are very excited about the companies and assets we have in these new products and the prospects for growth in the value of Bitcoin over time. The Harvest Bitcoin Leaders Enhanced Income ETF, HBTE, and the Harvest Bitcoin Enhanced Income ETF, HBIX, are now trading on the CBOE.